So, welcome everyone. We are back on the Financial Fox talking markets with Stuart Fieldhouse. He's a co-founder of financial news platform Armchair Trader. Stuart, it's great to have you on the show.
Great to be here.
Okay, so lots is going on with the market, and one of the common aspect among, I would say equity, but also crypto is the element of volatility, which is giving lots of headaches to investors because it's like, okay, what's actually going on? What I should do? Should I invest? Should I wait? What kind of sector should I look at? So I think it's not an easy time. What's actually your take on the current situation?
So I mean, we talk to a lot of analysts and fund managers pretty much every day. We like to think we've got a fairly good grasp of what's happening in the markets. Again, we're back to that situation we were in if you remember back in March 2020, when the market starts sliding again, everyone knows at some point there's going to be a buying opportunity. Yeah. But again, you're back in that crazy situation where no one's really certain where the bottom is. What I'm hearing is, and we've actually felt this ourselves for quite a long time, is that technology stocks were really quite, and still are in some respects, overvalued. Particularly if you look at something like Tesla, professional investors have been saying for months and months, if not years, that Tesla is just completely crazily overvalued and is due more of a sell-off than it's been getting recently. But it's just been one of those stocks that has had incredible interest. Even if you look at the Q4 numbers from retail investors, people are still buying Tesla. So every time it comes down, people are going to buy that stock and push it up. And it's just being kept up, I think, artificially. But overall, tech was looking pretty expensive going into this. So we weren't surprised to see Netflix get sold off the way it did. But the extent of the Netflix sell-off, I thought, shook a lot of people up. The speed at which that stock cratered. Having been such,
want to mention Peloton as well. That's another fantastic, I would say, COVID stock.
Two favored stocks during the pandemic, as you say, and now things are opening up. At least here in the UK, yes, it's not surprising to see those being sold off. But getting a lot more volatility in the market now than we had. So it's going to have a lot of people trying to figure out. Certainly, we're seeing a lot of people waiting to see what happens next. A lot of investors have been sitting on the sidelines since the start of the year, trying to figure out what's going to happen. A lot of uncertainty around the interest rate regime. We identified inflation as being a major risk factor for this year months ago. We didn't think the central banks had it under control. We still don't think the central banks have it under control. And I think that's part of the reason why you've seen such a sell-off this week and so much more volatility, because the confidence isn't there.
Yeah, well, they are not sure what they are going to be doing. They said, yeah, we are going to do that. We might do more, but they are not being very firm on that decision. And I think it's that level of uncertainty that is giving people those headaches. But tell me a little bit about the Armchair Trader, because what I really like is that you come out with these very unique companies, very fresh ideas, which, is exactly quite refreshing for the London stock market and the UK investor. Is not like the traditional sectors, even though you cover natural resources, but is a different kind of investment opportunity. And then also you add a lot of technology in the mix. So maybe for everybody watching, just give us a quick overview of the platform and then what kind of opportunities you are handpicking and why.
Sure. Well, basically my background is I've been working as a financial journalist for 25 years, but I've also worked in-house with a major hedge fund and also with a foreign exchange brokerage. So I was able to develop quite a good perspective of the market, both from the external position of looking at it as a journalist and internally working on a trading floor, working with a multi-billion-dollar hedge fund operation. And I think that perspective, when we set out to launch the Armchair Trader, we wanted to bring a kind of new and fresh approach for investors. We felt that you had a lot of journalists, including the newswires, covering the sort of the big blue chip stocks, but there was a lack of people. I mean, because there's so many small and mid cap opportunities out there, there's just simply not enough analysts and journalists covering those. You've got a few people who are picking out specific stocks. You've got some stocks that are always going to be favorites with the retail investment audience. But we're finding some really interesting opportunities that are really not being covered by analysts or journalists. You have to go back to the data, have a look at some of these companies. There's still some incredibly undervalued opportunities in the UK market, but also in North American markets as well. And so what we're trying to do is identify some of those and bring them to our audience. It's not just shares we cover, we also cover commodities, and we also cover the ETF market, which I think is still underrepresented in Europe. And American investors tend to be much more familiar with ETFs as part of their portfolio, but here in Europe, a lot of investors are still only just starting to get to grips with them at the retail level. So this year we're expanding our coverage of ETFs. And then the other area we're doing more work on these days is cryptocurrencies, NFTs, and the DeFi market, just because we think that it's still at a very early stage of its development, but again, massive amounts of interest. And if you look at the crypto market, beyond the sort of top 10 cryptocurrencies, there's a lot of other interesting coins out there that, again, not getting as much mainstream coverage. So our aim this year is to provide more coverage of those as well.
Okay, so if we are talking about maybe sectors, I mean, you mentioned already ETF that is quite overlooked part of the investment landscape, but I'm sure there will be other market sector, for example, that you see they are upcoming or they are going to be leading the future. And if you also want maybe to mention some companies, feel free to do, because what I would like basically to bring into the discussion, right? So what investors are looking, what are the areas that are gonna perform well, even in the future, even if we are in this uncertain situation, and I think that's quite important for investors to listen to those kind of conversation. They obviously have to do their own due diligence, they have to do research themselves, but it's the dialogue is about, okay, what other people are thinking about it. So tell me how do you see things moving, and which are maybe the sector that you see and the company they are more in their position to perform better?
So I mean, one of the things that we do, we consume a lot of data here, and it's not necessarily traditional data like what you would be getting from the market. This is something I learned when I was working in the hedge fund space. You also have to look at alternative data sources as well. So one of the most successful hedge funds in the last decade was one that specialized in US agricultural commodities, and part of their edge was satellite photos, analyzing satellite photos of planting patterns in the US Midwest. That's not information you're going to be getting on your Bloomberg terminal. So I'm always interested in alternative data sources that can give you a little bit more of a feel of what's going on in the market. That's how we were able to identify some of the sort of early meme stocks in 2020, because we could see the search patterns for specific companies coming out of Reddit. So for this, at the moment, to answer your question, we are still quite bullish on the commodities sector. It's not a traditional view, and a lot of people probably disagree with me on that, but we've seen some really interesting opportunities develop both last year and going into this year. So last year there was a real squeeze in the natural gas market, which provided a very profitable opportunity if you were able to get into that trade in the early summer. We still see a lot of, I mean, the argument against commodities at the moment is, well, the global economy is starting to slow down a bit. That will then, and China's starting to slow down a bit, that's going to have an impact on prices like iron ore, for example. But our argument is that you're going to still see some commodities really having a good year of it. We think, for example, the nickel market has already done extremely well. I think that's going to be something that will continue to perform. Anything that's involved with the whole transition to green energy, so any commodities that are going to be required for not just batteries for electric vehicles, but just putting together the green energy infrastructure that we're going to need if we're going to migrate over to a more carbon neutral global economy. The amount of base metals that are going to have to be purchased to facilitate that is just phenomenal. And I think a lot of people don't fully appreciate that, and don't fully appreciate that if you look at the mining capacity for some of these commodities versus the demand, there's just a massive disconnect there. And I think a lot of people are still thinking about the commodities markets like we're in 2018, but we're not. I think that's going to be such a huge theme over the next 5 years. So we are, we like big miners, for example, the likes of BHP. We've also had a trade on with Glencore for quite a long time that's done very well for us. Companies in that space as well, like smaller cap ones, we've been following Euro Manganese, which is a Canadian listed company we like a lot. That's a company that's processing high purity manganese from mine tailings in the Czech Republic. It's a small company, but it's strategically very well positioned for the sort of gigafactories that are going to be building all these batteries. Frankly, there's still not enough high purity manganese that can be readily delivered to these factories. They're going to be one of the few sources of it. A lot of people haven't woken up to that kind of opportunity yet either. So we see a lot of, in this year, we anticipate that there's going to be the beginning of some real opportunities in the commodities markets, because we think a lot of people still assume that commodities are going to continue to flow around the planet and there's going to be enough for everybody, and that something like a global slowdown will impact them. But you're already seeing these, like in the natural gas market or in the cotton market, or in also we saw it in coffee. It doesn't take much right now for things to suddenly shoot up in price just because there's a dislocation in the supply chain.
That's interesting. So let me ask you about gold, because what I kind of like, you said, people think the market is still the same that it was in the past. I mean, you mentioned 2018. What is happening to gold? Why is not reacting as it should be reacting as a hedge against inflation?
Yeah, that's a very interesting question. We've been looking at gold for a long time. I mean, we're still long gold, but it has been a very disappointing trade for a lot of people, and we have our own internal discussions about this on a regular basis. The expectation has been that gold will pick up because of inflation, but I think if you look at the gold chart, it's responding more to the tensions around Russia and Ukraine in some respects than it is to the actual inflation numbers. You saw when the Ukraine story, again, that's been something we've been following for a few months now, and we identified it as one of our top 5 financial markets risks for 2022 in a report we put out in December. That has been something that's been bubbling along for a while, but the moment it moved on to the front page headlines, you saw gold shoot up. Gold seems to be something that, I mean, if you I've talked to fund managers about this, and they've all got their own theories about why it's not been responding as they would expect it to. One theory that I've not been able to properly explore is that there is someone selling into the market who has a lot of gold.
Exactly. I mean, who will be there? It's been selling for like,
yeah,
years.
Someone has an interest in keeping it under 1800.
I mean,
and every time it goes up, they dump a lot of gold.
I don't know. Okay, that would should be a big play.
Yes, exactly. Well, I think, we would expect it to have gone up more. If you look at how it responded after the great financial crisis in 2008, there was a slight lag between the sort of collapse of Lehman Brothers and when gold and silver really took off. That wasn't really being driven so much by inflation, but more by quantitative easing. In this particular case, gold is already, trading at quite high levels, whereas back then it was lower. So it could be that some people just think it's, just a bit expensive where it is at the moment.
Yeah, but also another argument people say is that, okay, investors are not going to gold, they are going to Bitcoin. But that I don't think is really a fair argument, because especially right now that we are seeing the volatility of Bitcoin, you can't actually compare the two assets, right? It's just a different kind of really a different assets. It can't be, I mean, it's not definitely a hedge against inflation. It's more like, I wouldn't say a speculation, because I do really, I'm pro crypto, but it's more like a long-term, 5 years play. In the short term, it's not definitely something that you can compare to gold. So I think that's a really bad misunderstanding, and also miseducation by the media, because most of the media, they come out and say, oh, Bitcoin is hedge against inflation, and gold is not going up because people are investing in Bitcoin. That's not right. It's not a right argument, and it's keep being pushed by the big media. And I think this is a really important point to make, because people, they don't have a deep knowledge of financial market and also about crypto or gold. They would just take that as an assumption, as a reality, as a statement, where is a completely wrong assumption. I mean, I'm not sure if you think the same.
I would agree with you. Basically, because we talk to a lot of people in the sort of asset management space who are responsible for literally billions and billions of dollars. The problem they have with cryptocurrency is that the crypto market infrastructure, the ability to properly trade crypto, starts to break down if you're a bigger investor. So if you're a large hedge fund, there's only so much money that you can really devote to this market before you're starting to worry about how quickly you can liquidate positions. And your risk officers are starting to lose sleep because of there's another raid on another crypto trading platform by hackers. Money gets lost. Risk officers at funds don't like that. So these funds are not going to be using, big institutional investors are not going to be using Bitcoin as an inflation hedge. The sort of people who use gold as an inflation hedge and will go and put $5-10 million into gold are not going to do the same with Bitcoin. Exactly. That's currently the reality of the situation. The infrastructure is not there for the big league guys to participate even in Bitcoin as an inflation hedge on the scale that they could with gold. So I'm more inclined to subscribe to the fact that there's some big guys selling. And when I say big guys, I mean sort of national level actors.
So like, for example, China is liquidating their gold position. I'm just saying somebody, it could be even Russia. I'm not going to say Italy or Spain, but yeah, some big player on a political level, where if they are selling there, it will be they were going to be a big position somewhere else, or it's just a question of liquidation.
I don't know. I think I think it could be. I mean, at that kind of scale, it could be central bank activity.
Okay.
that they're selling on that kind of scale.
That is an interesting point that I think nobody has brought up to my attention, and yeah, very good. I think we will have to see what's going to happen. Eventually, they're going to stop, and the price is going to go up, and we can kind of go back some kind of normality. So we discussed about commodities and energy transition, metals. Tell me a bit about innovation and technology. So there are different aspects when we talk about technology. It can be cryptocurrency, can be maybe Internet of Things, can be cybersecurity, can be, digital identity, can be technology applied to different kind of businesses. I'm curious to see where you see, technology, which industry you see technology leapfrogging, coming in place.
Well, I mean, that's kind of, I would say there's three areas we like at the moment. We've always been big fans of biotech. I think biotech has a little bit of a reputation for being quite complicated for the retail investor to properly understand. Yet during the pandemic, we saw a lot of retail traders piling into some very small biotech companies, but huge price appreciation on companies with maybe a couple of drugs in development and maybe 3 or 4 guys on the payroll, literally. Obviously, these companies were working on solutions to the COVID virus, hence the interest. But I think that biotech is going to be still continues to be a very interesting market. Hard for the end investor to really get their head around some of these solutions unless you've got a degree in medicine or something like that. But you can still get decent exposure to them through specialist investment trusts, which are managing these portfolios of early stage biotech companies, and they have people working in these fund managers who are specialists in the space. So we would expect to see good.
You are a fan of Cathy Wood gene editing proposition? Are we putting those kind of stocks in that box of the biotech, or not really?
No, I think really the sort of biotech plays that we like are the ones which we think can have a real impact on some of the perennial diseases that we're still dealing with at the moment, like, for example, dementia. So you've got biotechs that are working on ways to address dementia. As you have an aging population in the developed world, it's becoming an increasing problem.
And the vaccine kicking in.
Yep, there's that as well. Our treatments for COVID symptoms, so not necessarily companies working on the vaccine itself, but on treatment of the symptoms of COVID once someone's already got it, to actually alleviate them very quickly. I think that's going to be a big area. More and more companies looking at that, and obviously the big pharmaceutical companies are interested in the space. So that's one area. I think artificial intelligence, something we like still. It's gone a little bit quiet because everyone thought it was going to be the solution to everything, and it takes time.
Yeah.
But that's a sector we like a lot.
I do agree. Sorry if I stop you here. I do agree it takes time, because it's not, you can just plug in artificial intelligence agent where you actually, there is a work of machine learning before and data collection where actually these agent, they are learning how to be intelligent, right? And so it can't be something very, very easy. And I think not many people understand how that works. But that's maybe why it's taking a bit more time.
Yeah. And NFTs, I've been very impressed with non-fungible tokens. It's such a young market. It's at such an early stage. There's a lot of focus on the sort of massive profits people have made already with these sort of digitized artwork. I personally don't think that's the future of the NFT market. I think things like, I'll give you one example, carbon credits. So turning carbon credits into NFTs that can then be traded on an exchange, so that a small company can take its carbon credits, mint it into an NFT, and then sell it on an exchange. That, I think, is an incredible area. So what we would really like to see, and I think will happen, is you'll see some more practical use of NFTs rather than just, here's my personalized portrait of a cartoon gorilla. You'll see, I think, I think that technology has got a lot to offer, particularly in financial markets and in the tokenization.
I'm glad to hear that, and very interested to see how actually NFT can be used in conjunction of financial market, because the use in art as collectibles, I mean, is part of the hype, is great, but yes, utility, it becomes more and more a core element for NFT to go mainstream really and go over this kind of first step. So what about DeFi? You mentioned that before.
Mm-hmm. Again, DeFi, very early stages. Where we've been looking at it is primarily how we think it might change the way people trade and invest. I think it's creating disruptive opportunities for new companies to come into the sort of financial market space, catering to sort of audiences or investor bases who've been underserved in this space. I think particularly areas like emerging markets, where people have been stuck in inflationary currencies or rigid currency regimes, and they want to get out of that and move their assets elsewhere. Things like that are really revolutionizing trading and revolutionizing the way money is invested. I think getting a lot of younger investors really getting to grips with this now. People in their 20s who are coming at financial markets from a very different angle and not just going down the traditional path, not dealing with the same old brokers or wealth managers. So I think we're going to see I think that technology is going to provide a lot of disruption. Yeah,
interesting. Maybe the role of the stockbroker is really going to change, and maybe that's definitely the industry is going to be disrupted. I completely agree with you. I mean, I'm so much pro development in DeFi and NFTs. It's just amazing. Another sector that I would like to discuss, or it's not maybe a sector, it's more like across horizontal trends, let's call it sustainability. And there is a lot of, talks about ESG and also greenwashing as well. So maybe share with me your thoughts on the space and how sustainability is actually poised or positioned to kind of, carry on an impact in the market. So being really sustainable, not just trying to tick a box.
It is, I think this is something that we have seen being driven a lot from the grassroots, because I see this from two perspectives. One, you see like the big sort of pension funds and the regulators and the fund managers all saying, yes, we're going to get on board with this, and we're going to be doing all this screening of our funds, so we'll kick out the polluting companies from the portfolio and things like that. But I think at the grassroots level, what we're seeing is a lot of interest from younger, sort of under 40 investors in investing in companies that are actually making a positive impact. So it's not just, I want to make sure that I don't have any oil companies in my pension fund. It's more, I want to invest in this company because it is helping to save the planet. It's not that it's not polluting or it's got a lower carbon profile, but it's actually got solutions that are actually going to help save the planet. And that's really what they're after. And maybe they take a hit on performance in the short term on that, but that doesn't that matters less to them than the fact that they're actually putting their money to work in companies which are actually doing something. And it's a big problem for people like, you know, the big oil companies, because they're obviously, you see guys like Enron and BP desperately trying to reshape the way they do things. But I think the real interest is going to be in we're seeing it already, you know, in sort of hydrogen and things like that, where people are developing the technologies of the future. Velocis, which is looking at ways to recycle jet fuel and find, you know, zero carbon ways for the airline industry to function. That kind of company and that kind of technology is really exciting stuff. And I think a lot of investors are looking to put money in those sorts of opportunities.
Okay, listen, usually I ask, when I talk about markets, I ask my guests to give me, I don't want to say tips, but maybe draw the attention to some companies that you like. And I would like to ask that to you as well, because, you know, you are covering quite a few companies. We have discussed about market opportunities, sectors, verticals, you know, maybe give me, I don't know, 4 or 5 companies that small, they don't need to be big, or they are big, it doesn't really matter, that you really like at this point in time.
4 or 5 companies we really like. So we like, for example, Nano One, which is a battery technology company listed in Canada and I think in Germany as well. They're developing solutions for making batteries for cars and other uses more efficient and more energy efficient. So that increases the range of the vehicle and also the life of the battery, and also looking to make battery supply chains more sustainable. I've mentioned Euro Manganese, which is a business we really like. There's a company called TAAT, T-A-A-T, which have developed something called Beyond Tobacco. It's a non-nicotine proprietary smoking material for people who are smoking and want to get themselves off nicotine. So they're manufacturing these zero nicotine cigarettes as an alternative to vaping or, you know, patches. This has actually not got any nicotine in it at all and replicates the sort of smell and taste of tobacco without actually being addictive. So can help smokers to kind of convince themselves that it kind of tricks the mind in a little way, but they're targeting that at the massive billions of people who are smoking around the world at the moment, but who would like to actually kick the habit. So that's a company that's already, we're seeing them really taking off now, with lots of reorders coming in for their stuff. Generally speaking, we like the companies that are in the what I call the zero meat space. So guys like Zoglo's Incredible Food Corp. But you know, we followed Beyond Meat very closely because we think there's a massive future for this sort of meat substitute technology.
Yeah, well, you're talking to a vegan, so I don't actually eat a substitute of meat, because I think one of the issue there is that most of them, they use soya. Mm-hmm. And soya is not a gray, it's not a gray element. You have to be careful, and some concentration of soya can also not be good. And also I don't like the substitute of the cheese, because it's just a bunch of coconut oil mashed up with some other stuff, and it's not really healthy. So I think even there is a market that you have to kind of be careful, but definitely food going more plant-based is the space. So it's good to have companies like Beyond Meat and many others. They are pioneering, and they are moving the industry forward.
I would also mention I pronounce it Virtue Motors. It's a UK mid-cap car dealership.
Okay.
They've been doing extremely well because they're tapped into this whole secondhand car boom that we're seeing both in Europe and in the UK. More and more people buying secondhand cars rather than just going and buying a new car. So they've been doing extremely well. There's been a huge disruption, obviously, in deliveries of cars as well. So you would expect companies in that sector to do badly, but where they've got a massive sort of hold over the secondhand market, they've actually been able to really benefit. And we think that's a cheap company, really well managed, great network of stores. We like Marshall Motors as well, which is in a similar space. And then we were long that, and the bid came in for that. So we did very well. We liked Turkish Airlines. Turkish Airlines is still worth looking at because they've got a great European cargo network, which operated virtually at full throttle all the way through the pandemic. So they haven't been hit as badly as some of the airlines that relied on passenger traffic.
Okay, well, I think we have got a lot on the plate now, and I think also for investors to check out. Listen, Stuart, it was great to have you on the show, and I hope that we can do it soon another time and maybe kind of concentrate on one sector and, break it down a little bit more. But I think it was very useful. And I think another element that is important to say is that the profile of retail investors has changed a lot after COVID, and is a different kind of investor that is younger, that is more open to opportunity, and is not, the old traditional equity investor focus on natural resources, oil and gas. Is a completely different profile. And maybe that is something that we can bring into the next conversation. But thank you a lot for today.
Yeah, absolutely. We've got a lot of intelligence on that. So yeah, happy to discuss that.
Okay, Stuart, thank you.
Thank you very much.
Okay, thank you everybody for watching. This is everything